Mickey.
Recording in progress.
Hello, good day, guys, and welcome to today's webinar. My name is Nicholas, your host, Akabogu, and today we are going to be talking more about trading essentials. Last week we started trading essentials where we talked about setting stop losses, and also we talked about how you can maximize your profit potentials from setting stop losses the right way. Today, we are talking on a whole different new topic, and it's going to include various ways to be able to understand market setups, able to understand how you can make twice as much profit from the market without having any hassle from your trades, your setups, and all of that. So with all that being said and done, let's begin. Next page, please. All right. So today, we're going to be having a look at time frames, indicators, and indicators that help confirm trends. Now, the main focus of this article is to guide you through the process of developing your own Forex trading plan. Why it doesn't take long to come up with a system, it does take some time to extensively test it. So be patient. In the long run, a good Forex trading system can potentially make you a lot of money. First, we talk about time frame. The first thing you need to decide when creating your system is what kind of Forex trader you are. Are you a day trader? Are you a swing trader? Do you like looking at the charts every day, every week, every month, or even every year? So how long do you want to hold on to your positions? These things are very important. They will help determine which time frame you will use to trade, even though you will still look at multiple time frames, but it will be the main time frame you will use when looking for a trade signal. Now, we are also talking about finding indicators that help identify a new trend. For instance, since one of our goals is to identify trends as early as possible, we should use indicators that can accomplish this. We have moving averages, which are one of the most popular indicators that traders use to help them identify a trend. Specifically, they will use two moving averages, one slow and one fast, and wait until the fast one crosses over or under the slow one. This is, of course, the basis for what's known as a moving average crossover system. And now, in the simplest form, moving average crossovers are the fastest ways to identify new trends. It's also the easiest way to spot a new trend. Of course, there are many other ways Forex traders spot trends, but moving averages are one of the easiest to use. Now, we talk about step 3, find indicators that help confirm the trend. Our second goal, of course, in our system is to have the ability to avoid whipsaws, disappointments, meaning that we don't want to be caught in a false trend. The way we do this is by making sure that when we see a signal for a new trend, we can confirm it by using all the indicators. Now, there are many good indicators for confirming trends, but the most popular and most widely used, we have the likes of the MACD, the stochastic, the RSI, Relative Strength Index. And as you become more familiar with these various indicators, you'll find that ones that which you prefer over the others and which you can incorporate into your trading system over time. Next page, please. Now, we talk about defining your risk. When developing your Forex trading system, it is very important, very, very important that you define how much you're willing to lose on each trade. With that mindset, you should understand that not many people like to talk about losing, but in actuality of it, a good trader thinks about what he or she could possibly lose before thinking about how much they can win or they can gain. Now, the amount you're willing to lose will be very different than everyone else, because you have to decide how much room is enough to give your trade some breathing space, but then at the same time, not risk too much on one trade. You will learn more about money management in a later session. Money management plays a big role in how much you should risk in a single trade. Now, we talk about defining entries and exits. One of the most ways, or rather one of the Forex traders believe that it's best to wait until the candle closes before entering. But we have been in many situations where we'll be in the middle of a candle, indicators match up, only to find out by the close of the candle that the trade has totally reversed on him or her. But some people like to enter as soon as all of the indicators match up and give a signal, a good signal, even if the candle hasn't closed, because others like to wait until the close of the candles, right? But then it is all really just a matter of your trading style. Some people are more aggressive than others, and you will eventually find out what kind of trader you are. For exits, you have a few different options. One way is to trade your stop, meaning that if the price moves in your favor by certain X amount, you move your stop by X amount. Another way to exit is to have a set target and exit when the price hits that very target. Now, how can you calculate your target? It's up to you. Some people choose support and resistance level as their targets, while others just choose to go for the same amount of pips on each and every trade. However you decide to calculate your target, just make sure you stick with it. You never exit early, no matter what happens. You stick to your trading system. After all, you developed it. So one way you can exit is to have a set criteria when met, how your signal will be. For example, you could make a rule that if your indicators happen to reverse to a certain level, you would then exit out of the trade. Step 6, you write down your system rules and you follow it. The most important thing about creating trading system and rules is that you must write down your trading system rules down and always follow it, always. Discipline is one of the most important characteristics a trader must have, so you must always remember to stick to your system. No system will ever work for you if you don't stick to the rules. So remember to be disciplined. We also remember that you need to test your Forex trading system to be at the best it can be. Next page, please. Now, either you enter long or you enter short. That's one of the two things. The 5 SMA crosses above the 10 SMA and both stochastic lines. Both stochastic lines are heading up. They do not need to enter if the stochastic lines are already in the overbought territory. A relative strength index RSI is greater than 50, then you can enter for a long, a buy, or a bullish position. But then if the 5 SMA crosses below the 10 SMA and then both the stochastic lines are hitting down and do not enter the stochastic lines are already in the oversold territory. The RSI is said to be less than 50. Now we have exit rules. Exit when the 5 SMA crosses the 10 SMA in the opposite direction of your trade, or if the RSI crosses back to 50, then it's right to say you exit when the trade hits the stop loss of about 100 pips. Now let's take a look and see what it's the reaction of this. It might be a bit ridiculous, but as you can see, we have all the components of a good Forex trading system. First, we have decided that it's a swing trading system and that we will trade on a daily chart. Next, we use simple moving averages to help us identify a new trend as early as possible. And then the stochastic helps us to determine if it's still okay for us to enter a trade after a moving average crossover. And it also helps us avoid oversold and overbought areas. The RSI is an extra confirmation. It's an extra confirmation tool that helps us determine the strength of our trend. After figuring out our trade setup, we then determine our risk for each trade. For this system, we are willing to risk 100 pips on each trade. Usually, the higher the time frame, the more pips you should be willing to risk, because your gains will typically be larger than if you were a trader on a smaller time frame. Next, we clearly define our entry and exit rules. At this point, we'll begin the testing phase by starting with a manual backtest. Now, let's take a good look at an example of a long trade setup. Next page, please. Now, we have a chart on Euro USD, the daily time frame. We can see that the stochastic is showing upward momentum, not yet overbought, still at the period of ranging. We have our 5 SMA crosses over the 10 SMA. Now, if we went back in time and looked at the chart from, let's say, where we had series of doji candles, we would see that according to our system rules, that this would be a good time to go on a long trade. You know, to backtest, you would write down at what price you would have entered, your stop loss, your exit strategy. Then you would also move the chart one candle at a time to see how the trade unfolds, right? But then in this particular case, you should have made some decent pips. You could have bought yourself something nicer than after this trade. But then look what happened. You can see that when the moving averages crosses in the opposite direction, it was a good time for us to exit. Of course, not all your trades will look this good. Some will look the ugly hell high-fives, but then you should always remember to stay disciplined and stick to your trading system rules. Here's an example of a short entry order for the So Easy It's Ridiculous system. Next page, please. Now, you must always stick to your trading system rules. If you have tested your Forex system thoroughly through backtesting and by trading it live on a demo for at least 2 months, then you should feel confident enough to know that as long as you follow your rules, you will end up profitable in the long run. So you trust your system and then you trust yourself. You create your own mechanical trading system. There are many systems out there that work, but many Forex traders lack the discipline to follow the rules, and as a result of it, they end up losing all of their money. So always create your own mechanical or manual trading system, as the case may be. Next page, please. Now, your mechanical trading system should attempt to accomplish 2 goals. 1, be able to identify a trend as early as possible. 2, be able to find ways to avoid whipsaws. You know, confirm your trend. If it's profitable, then you trade your Forex system like live on a demo account for at least 2 months. Then we'll help you get an idea of how you will trade your system when the market is moving. It's a lot different trading live than manual backtesting, obviously. But once you have demo tested your system for at least 2 months and you're still profitable, you are then ready to trade your system live with real money. However, you must always remember to stick to your rules no matter what. There are 6 steps to developing your mechanical Forex trading system. 1, you find your time frame. 2, you find indicators to help you identify trends easily. 3, you find indicators to help you avoid whipsaws and confirm your trend. 4, you define your risk. 5, you define your entry and exit. 6, you write your Forex trading system rules down and always stick to those rules. There are 3 phases to testing your system. 1, you go back, time and move your chart forward, 1 candle at a time. 1 candle at a time, don't forget. This, of course, is called backtesting. Now, if it is profitable, then you trade your system live on a demo account for at least 2 months. This will help you get an idea of how you would trade your system when the market is moving. It's a lot different trading live than manually backtesting, of course, because once you have demo traded your system for at least 2 months and you're still profitable, you're then ready to trade your system live with real money. However, you must always remember to stick to your rules no matter what. Hypothetical performance results have many inherent limitations. But at the end of the day, results and all of which can adversely affect actual trading results are actually very important. Next page, please. So that's all for today on our webinar, and I hope we're able to give you deep insights on how to manage your trades. Risk management, of course, is one of the top ways of generating profits. Once you're able to manage how much you have in your account, know how much you're willing to risk, know how much profit potential you're expecting from each trade, then I think you're going to be that professional trader who makes consistent winning trades. So thanks for today, and we'll see you again next week.